Our next guest highlights the country may be finally exiting the structural deflation it has experienced, which could deteriorate the value of owning cash and push investors into higher risk alternatives. He just returned from a recent trip to Asia with some additional key takeaways on the country. Joining us now is Henry McVey, the CIO of KKR's balance sheet. Mike Santoli, of course, joins the conversation as well. Warren Buffett who? Henry McVey just got back from Japan and is bullish on the country. Why?
I wish that was the case. No, thanks for having me. Look, I mean, I've been going to Japan since 1995, and the firm has got a big presence there. We've really been focusing on corporate carve-outs. I think what you have to think about Japan now is what if they do exit deflation? And that's a pretty bold statement to say that, but there are literally trillions of dollars that have been sitting in cash, which has been the rational thing to do. I think you're going to see some money start to move. And so what's the opportunity set? One is there's clearly more focus on return on equity in the public equity markets. I think our theme at KKR of doing corporate carve-outs with large conglomerates, that is going to accelerate further. And I think what we need to see is what does the insurance world do? What do individual investors do? And what do institutions do that have been sitting on all this cash when that was a rational thing to do? Right now, real yields are negative. I didn't know it was a 40-year high, but you can feel it on the ground. I waited an hour and a half in line to get through customs. There's a lot of people going into Japan. That certainly wasn't the case. We can get to China, but that wasn't the case when I was there.
I was going to say that reflects to some degree maybe the chance for a higher metabolism or a lot more money in motion from Japan. And then you have that at the same time where China, at a totally different stage of a reopening process or whatever, is also maybe coming back to life. So I'm wondering what do you think the implications are, whether it's offsets to U.S. weakness or anything in terms of opportunities in markets there.
Yeah, I mean, first thing is in Asia, we have 8 offices and 130 people, none of them who are American, all local. There is no one Asia. That's point one. Point two is I do think that we're going to see a tightening of financial conditions from the regional bank stories that you guys have been covering well. An offset of that, though, is China's bottoming. It's coming out of a funk. I don't think we're going back to where we were in terms of, I was saying that when I joined KKR, nominal GDP in China was 20%. Today it's 5%. It's actually less than the U.S. But there are definitely green shoots there. That feels good. I would say the one thing that both China and Japan are dealing with is the demographics. Right? There is a labor shortage going on globally around the developed markets. China's not been immune from that either.
How do you talk to U.S. say retail investors on how to leverage this whole trade?
Yeah, I mean, to me, I think our structural view is the dollar has been peaking. I noticed the earlier commentary. If you look, Europe's sneakily doubled the U.S. performance this year. You got to get some money outside the U.S. Second is I think there's going to be more corporate reform in Japan. And then I think the other thing is ultimately, one of the things I see from our 46 years of data is when we've made a macro bet being super bullish or super bearish, that's not the way to play it. You got to stay consistent on your deployment, and we're trying to do that globally. Right now, there's a lot of opportunity in credit where banks have seized up, but this theme around public to privates as well as corporate carve-outs, that's a global phenomenon. There's more of that coming.
Here's what I don't get, Henry. So if a country is exiting decades of deflation, it would argue for tighter monetary policy. Because that's been the hallmark of Japan, right? Easing and easing and easing and easing and buying stocks and buying everything. If they get away from that, isn't that bad for the risk appetite there?
I think ultimately their structural level of real rates is a lot lower than the U.S. They've got more demographic challenges. What I'm saying is that you're going from deflation to some very low inflation. You'll still have the banks are very well capitalized over there. There's tons of liquidity. And ultimately, if inflation settles in at 0 to 1, it's been negative 1 to 2, that's a big change. And so you still got to pick your spots. But what it means is you can't own cash as an alternative. It's the same thing here. What happened with the banking crisis? People woke up and said, hey, wait a minute, I'm earning negative returns on my deposit, and I can go directly into the fixed income market and make money, and money got in motion. We've clearly overstimulated demand on money in the system from the central banks. Japan's probably the last, I'd say, one to fall in terms of shifting policy a bit. And they've signaled that with their new central banker. I don't think it's going to be disorderly, but it's a major shift after 30 years.